Hey everyone, welcome to today's Explainer. I am so pumped you're hanging out with us today because we are looking at something that can literally change your entire financial trajectory. We're talking about the ultimate blueprint for passive income in 2026. If you've ever found yourself wishing you could set up systems that make your money do the heavy lifting for you, so you aren't just constantly trading your time for every single dollar, well, you are in the perfect place. We're going to look at strategies that are highly effective right now, and honestly, the best part, you absolutely do not need to be rich to get started. It's all about playing it smart.
I want you to really think about this for a second. What if your money kept growing even while you sleep, right? It sounds like the ultimate dream. But as our source material makes super clear, these passive income ideas actually work in 2026. You don't need a massive trust fund. It's really all about strategy and structure, which is exactly what we are mapping out today.
Okay, let's dive into this. We've got a highly structured blueprint today. We are going to cover the passive income reality, letting your money work, building digital income streams, renting out extra space, and finally, the bottom line.
Starting right off with Section 1, the passive income reality.
Let's start with a really clear definition straight from the source. What exactly is passive income anyway? Well, the absolutely crucial thing you need to understand is that passive income does not mean free money. That's a massive misconception. Instead, it means doing the work once or taking the time to invest your money really wisely so it just continues earning over time with significantly less ongoing effort. Actually, think of it more like a giant puzzle. You do the heavy lifting to put the pieces together at the beginning so the completed system just keeps paying you out later. And this brilliantly illustrates a myth that is holding so many people back. This completely wild idea that passive income is just instant, free money falling from the sky. No way. The reality is that most successful passive income streams require time, money, or effort up front before they start producing any sort of consistent results. You literally have to build the machine before the machine can work for you. Understanding this upfront requirement right out of the gate is how we build long-term trust in the process.
Moving on to Section 2, letting your money work.
Now, what's really interesting about this slide is how we can lay out your capital-based options right side by side. We've got three main avenues here, ranging in risk and potential reward. First, high-yield savings, which naturally carries the lowest risk. Next up, index funds and ETFs, offering broad market growth, though, it's not guaranteed. And finally, dividend stocks, which essentially boils down to company profit sharing. Let's break each of these down a bit more, shall we? First up, high-yield savings accounts. The premise here is super simple, but man, is it powerful. Instead of letting your cash sit idle in a regular checking or savings account earning practically zero, you just move it to a high-yield savings account. Boom! By doing this one single action, your money earns significantly more interest. It's pretty much universally considered one of the easiest ways to start earning passive income. And because your cash is totally secure, it remains the lowest risk option available. It's basically an effortless, no-brainer upgrade for the cash you already have sitting around. Next, we're looking at index funds or ETFs. This is an absolute staple strategy. So many long-term investors regularly put their capital into broad market index funds or ETFs. Why? Well, because historically speaking, the US stock market has grown over long periods of time. You're basically betting on the overall growth of the economy rather than trying to stress out and pick a single winning company. But hey, please pay attention to a crucial caveat here. Historical growth is wonderful, but returns are never, ever guaranteed.
Okay, our third capital-based method involves dividend stocks. This is where you buy shares in companies that actually pay their shareholders a slice of their profits. These profit payouts are called dividends. But here's the real secret sauce for passive income. You don't just go out and spend that dividend payout. Nope. Instead, you reinvest those dividends to buy even more shares. Over time, this compounding effect acts as a massive accelerator, helping your investments grow exponentially without you having to lift a single finger.
So, those are fantastic strategies if you've got some money ready to deploy. But I know exactly what some of you are thinking. I can hear it right now. What if you don't have cash to invest up front? It's a completely valid question. If you don't have the capital, you just have to lean on your creativity and your effort. So let's shift gears for a second and look at exactly how we can do that.
Which brings us to Section 3, building digital income streams.
One of the absolute most effective ways to do this is by selling digital products. The absolute beauty of this model is that you create the product once and you can sell it infinitely. The source gives us some really concrete examples to get the gears turning. You could write an ebook. You could design printable planners. If you're a wizard with spreadsheets, you could create and sell budget templates. Or if you've got specific expertise, you could build online courses. Because these products are entirely digital, they just keep generating sales for you long after you hit that publish button.
Let's move to and see how this builds into another massive digital opportunity, YouTube. Now, the strategy here relies on making consistently helpful videos. You can literally write down all the details of what you know and make a video out of it. The source highlights some highly popular and lucrative niches: finance, tech, education, or even diving deep into your own weird and wonderful hobbies. You put that upfront effort into creating the content, and then you just let it sit and wait for those videos to gain traction in the algorithm. Once they do, your entire back catalog of videos can just keep earning you money from ads and other monetization methods, humming along passively in the background.
All right, Section 4, renting out extra space.
Look, if you've got some physical space, you likely have a passive income stream just waiting to be tapped. The source points out 3 very specific areas you should look at. Do you have a spare room in your house? What about an empty parking space in a super busy area? Or maybe a storage area you aren't really using? By just renting out these exact types of spaces, you can secure reliable, recurring monthly income. And honestly, it requires almost zero daily effort once you actually lock in that renter.
And that leads us perfectly into section 5, the bottom line. I want to leave you with a quote straight from our source material, and I really want you to let this sink in. The best time to build passive income was yesterday. The second best time is today. You know, it's so easy to get caught up in analysis paralysis, just sitting around wondering if you already missed the boat. You haven't. The opportunity is right here, right now, today, just waiting for you to take that very first step.
So the crucial point is summarized perfectly in these 3 final steps to achieving financial independence. Step 1, start small. You don't need to build a massive empire overnight, okay? Just pick one single stream to focus on. Step 2, stay consistent. Remember that reality check from the beginning? It's going to take some upfront time and effort. And step 3, let your money work for you instead of you always working for your money. That right there is the true mindset shift of passive income.
Before we wrap this up, just a very quick note. The information we presented today is for educational purposes only and is absolutely not intended to be financial or investment advice. Remember that all investments involve risk, including the possible loss of principal, so please do your own research. But with all of this incredible information laid out right in front of you, I've got to ask you one final question. Out of these 6 distinct passive income streams, which one are you going to start building today?